for these because that's why I always do my Zoom session. Besides them being a documentation of, it's more like journaling actually. I journal on a video instead of me typing everything down. Where I'd know I'd either be lazy to go back and read everything thoroughly throughout and be able to exactly replicate the way that I was thinking, or at the same time just going through the content yourself. So with the video, with audio support on top, you can actually, just piece together how the moment was.
I get you, my brother. I get you.
Yes,
Where are
yes,
you
yes.
based in, by the way?
Who, me?
Yeah.
I'm from South Africa, in Joburg to be specific, in Roodepoort.
So Quavo is from Nigeria. Quavo, where are you from again? Are you from Nigeria or you're from Senegal?
He's from Nigeria last time I checked.
Nigeria. So Nigeria is 1 hour ahead.
I think, I don't know. It's quite confusing. I thought we had the same time actually, but him saying that is ahead of
Just
me.
check.
Yeah, I
Let me
think
just check.
it's probably just an hour.
Because right now for me,
yeah,
I'm not on my PC. I'm not even touching my PC. I'm doing this Zoom session on my phone. So for me, I thought that we're having the call during 7. I was surprised that nobody's there. That was the time to actually be, serious, share some chats here and there. I was surprised that there was actually no call. Because right now, I'm about to launch in bed. Because I have to wake up tomorrow and then I have to
but then
work on my chat.
It'll be lovely if we'd see your perspective through the PC view instead of a phone view. Although yes, it wouldn't make much of a difference, that is. But in order to just, I don't know what to say, but yeah, if you're willing, if you don't mind, you can, because you're gonna jump in after, of course. I'm gonna start, and maybe Quavo might follow, or either you are gonna follow, but you'd have enough time to put your PC, put everything, and make sure that you join in with it, and just do the breakdown, then turn it off, then get back to the rest of the day. But then if you cannot do that either, it's completely fine. We don't have to force the situation.
Let me see what I can do. I'll get back to you.
Yeah, you definitely keep me updated as we are getting on with the live.
I've been hearing drama going on in South Africa. You tell me. Let me hear your perspective. I've heard there's a lot of scamming going on that side. I've heard they aren't
on the forex
side.
Okay, I was about to say this specific because South Africa is a very, very busy country, so a lot of things are going on, and I might not know what you're talking about. But yeah, especially with the South African brokers, bro. Like, I'd really, if you are interested in entertaining them, I'd really recommend that you really, really stay away from them as much as you can, because spread wise, of cook wise, all these other funny things, and a lot of many red flags go on. Then as for scamming, there's a lot of scamming going on here. You have to switch on, because there'll be people saying they're mentors and stuff like that, pretending to be people, or either the actual mentors themselves. So okay, this is not necessarily a scam, but it's to those who are lazy. I say lazy because it's information that you can find for free if you're really willing and you know who to talk to or where to go. Even if you don't know, but then if you're willing, you find out. So it's like they'll host seminars. You see these funny seminars, and they do it for such a cheap price. And mind you, these people have such a huge crowd. So it's not about the amount, it's about the quantity, in a sense that, let's just say it's you, for example, you have 100 students. That's a start, that's a basic. Obviously people can even have over 100 students, because forex is really overrated at this point, and there's just a lot of noise under it. So with those people, you just say, okay, fine, what am I doing? I'm doing a seminar on which you're a famous trader, your property, of cars, and everything to show off, you understand? So you're like, I'm doing a seminar, so it's just gonna be $100 or $250. It's not really that expensive when they usually do this, by the way, because they're just gonna be for 1 day, and yeah, it's over. Then they get base like basics, what is codes, pairs, candlesticks. The strategy is gonna be rebuilt, of course, anyway. But there's no way you're gonna catch that thing on one fucking day. Unless I don't know if they also record everything that they're doing on that certain day and they share with everybody who's involved. But that's it. So that means you on that certain day speaking for probably only 4 hours at the event. I'm just estimating on the hours, but it's just not a lot at the end of the day. That's the point that I'm making. You would have left with, let's just say it's 250, right? 250 rands multiplied by 100 people. It's roughly, let's just say, it's not 2.5 most definitely. Let's just, yes, 25K. It's probably either 25K or 250,000, somewhere there. But at the end of the day, you can hear that you made money over simple things that you can even find them on YouTube. You understand? So
I get that, bro.
Yeah, besides that, there's a lot going on. That's all I say. What are you really on, to be specific? In terms of scams going on, because there's a lot of shit going on. Yeah.
Because I've been seeing I'm very well educated in terms of trading space. What's happening in other countries? What's going on?
Yeah. True. Oh shit! Fuck no! Come on, connect fast.
Going up here and there, that people are getting scammed. That traders who are actually in association with brokers. These are big red flags. We're talking about RCG markets.
Oh yeah.
We're talking about.
Once you just said brokers who are red flags, and I just immediately thought RCG. Like that's the first thing that came to my mind. And honestly speaking, whatever actually, when I talk about people making seminars, I'm actually talking about them. It's just an example, by the way, and a lot of people have done this. Not that I'm bad naming everything, because this is going to be public anyways. So just to avoid any commotion in general, it's nothing against them. But they're holding a seminar recently now, I think in Botswana or Kenya or somewhere. I'm not quite sure, but I know they're doing that. So irrespective of that, yes, they're going to be exposing people to Forex, elevating them and so on and forth. It's a bargain. And they do this consecutively. So like 2 months down the line, 3 months, or a month after, and so on and forth. And, there's this funny scam I'm going to tell you. I don't know if you know about this, but they do this. This happens a lot with IBs, with brokers, of which I've been an IB with a number of brokers, I think 2 as a limit so far. So this is what I got to find out with the first partnership that I had, where the broker is willing to give you a car, right? The car doesn't belong to you. It's under the company's name. But at the same time, the car is for you to attract attention, people. So as you do that, yes. So when you do that and you make them sign under your referral link, and you're also doing Forex classes at the same time, you're also doing signals, and you're charging commission. Eventually, the more clients you have, you're going to get to clear that debt of that car. That at some point along the time, it becomes yours. But if you do fail to do that, of course, the car gets taken away. So, there's a lot going on.
Damn, bro.
Yeah, so that's another way where, they do those funny operations. Yo, I was disconnected for a moment. What'd you say?
I was saying it doesn't make sense for you to buy your own car with your own money, with trading money, and then you're taking a sticker, putting it all over that car for another market, where you're making money advertising another broker. It doesn't make sense, bro.
Yeah, exactly. Being a car guy, you wouldn't do that. Plus the coating, the green colors and everything. Maybe it's the signature move and so on and forth. But it's not really that necessary.
100%, man. Let's get into the charts, bro.
Yeah, we are here anyways. That's where I was going. We'll be done with the catching up. So let me just clear everything here, because oh no, this is the wrong one. 38 drawings. There must be something serious going on here. So let me not tamper with that. Let me see. So this might, okay, is it yuan? Okay. But then anyways, let's just go. It's not like I can't replicate what I would have done there anyways. So here's EU, and we're gonna be on that concept that we had discussed in the group in terms of psych behavior, right? What do you do in the heat of the moment? Let me just see if this is the right price action on the daily. That's where I got to see this. And by the way, I also sent the link to the video that prompted this, of which it was a video of EB, no, actually Abdu, talking about risk management, actually managing trades and so on and forth. So if you do follow me on Insta, you did see my update today where I was doing my forecasting basically. So I'll just take you through a quick run through this after we are done with this, provided that I still have time for my session so I can give them the next slot. But if not, that's fine. There's nothing wrong with it. So starting off on the monthly, right? So at that time of moment being, what you would have seen, right? We're just gonna ignore many other things. We don't have to be there anyways at this point in time. But for those who are beginners, this is how you actually know where to limit yourself. Okay, know where to limit yourself in terms of what you're looking at. Of which now here, this is what we have. We have phase 1 as an impulse over there. Phase 2 over there for the correction, then phase 3 over there coming in for the impulse. So we can clearly understand the nature and price action behavior at that point. And what we actually have here is not just a random setup, by the way. I see a text is coming in there. Let me see what's going on. Am I the only person who can hear the sound? Yeah, you're probably the only one. And yeah, a lot of people would have complained. But let me just type, if you can't hear anything, you're the only one. Everyone else not raining yet. You'll catch up on the recording. So now going on in terms of understanding what price is actually telling you, right? So looking at this from just here, never mind where we are in terms of time frames, but just understanding the concept behind what price is actually telling you. So reading this, we have a hook point here, right? No, she's not a hook point, it's a key level. They just call it that, or because we had a double bottom from it before. So just the key area that we're looking at, right? This is the actual hook, but then we're not there in terms of hooks yet. We're just discussing something of which the market left a gap here. So this behavior, it's not random, okay? I know most of you know it for the advanced guys, but if you don't, yes, this kind of setup, right? This either is to the downside or to the upside. It doesn't really matter, but the concept behind it is what actually matters, of which the market pushes up, leaves a footprint there, comes back down, pushes up, but fails to come and clear that. Mark sees this a lot. So if you follow the Falcon page, this is like a song to you where you know all the lyrics of where we fail to break that, we come back down, we push back up, we break that, and we also violate that at the same time. And it now becomes a complete structure. So with that, this is the same thing over here, which there's the gap, which would have kind of hinted you probably after from here that, okay, we still have this entire room to fill to the downside at the end of the day, because we left this and we know by nature this has to be filled and the market has to go up, or which eventually with current price action we know where the market is. But anyways, going with what we are actually focusing on here. So I'm actually just gonna push this back because I'm actually gonna focus on, you know what, let me start here. Yes, let me start here because I'm already there anyways. I wanted to start with the first trader mentality, but because I'm already on the second proper one of how we should have behaved, then let me just go on anyways. It doesn't matter. The arrangement doesn't really matter. So now with that being there, we understand that we broke over here. So this is also another concept that I have, but then it's not really important now actually, because this has already happened. We're here, so we're not going to be there. But looking at price action so far with that understanding, irrespective of that, we're expecting it to actually go up. We know when to get involved if that is to happen. So with that, what we can clearly see is more of like a break and retest over there. But anyways, this is phase one, phase two. Let me go to the daily because that's where it's much more clearer. There's nothing on the week for us. So looking at it from the daily, we can clearly see what price is telling us of which we're at phase one, phase two of that, phase three of which now becomes phase one of the current structure, of which my point of interest is actually from here, where I would have loved to see price action from this point, at which that's where also EB headed, up to. I'm addicted to EB. So Abdu is a little bit foreign to me. So I'm much more familiar with EB. That's the name that comes in mind when I want to refer to something that I've learned. But then anyways, with that understanding, that's the bottom of the pit. And we clearly see that, okay, fine, right? Yes, we are expecting price to go to the upside, but then looking at the nature of price, okay, the progression here, there's really nothing happening yet, in a sense that if I would wanna look at this, there's a way that I actually try and actually clear out all the entire confusion, in a sense that I'll put this in a rectangle. Why? It's a range basically, where because there's a lot of confusion, it can either be this or this, right? But this obviously would have something that will probably do that. But we're not there yet. We actually focus here because we're also on the daily. So that would be a long move to the downside. So we're not really there yet. So with this, it actually helps me avoid a lot of noise, I can say, because I'll wait for it to develop. Probably when it gets here, it would have given you enough clues in terms of what it's trying to do, right? So also, let me just add this because I use it anyway, and I've exposed it in one of our live sessions. I don't know if you were there, Billy, but if you're not, you just hit me up. This is not something I'm going to keep with you, because since I'm not teaching, you're going to have to figure everything out for yourself. But then you'd have the theory of it. You'd have to be more practical. So I have my golden ratio there, the 50% for validating that as long as the structure doesn't exceed more than 50% or more of the impulse, then it's still valid. So with that being that, I'll just leave it there, irrespective of that is being triggered there. So yeah, I'm not really on the position that came in here, probably because there might be a position there. I'm more focused on this because that's where everything actually began. So let me see if I'm allowed to move down to the 4 hour at this point in time. Yes, there's nothing much more to cover from the daily. We literally covered everything that needed to be covered there. So now, looking at it from here, we can just give it more room to play out, because there's not really much going on here. Anything here that's going on here is noise at this point. So we've really done much of the analysis. Now we're on the executional part of it, of which now this is where you actually get the message from the market now in terms of what it's actually trying to do, or which if you're a support and resistant trader, now you're getting fucked because you're going to be buying here. But anyways, that's not our concern. We're not there. So now with the current knowledge, current experience, current market view, what I would have seen and what I would have been seeing at that point, if I happen to have the experience I have now, would be this, right? That's a footprint that's left over there, probably to come back and wipe out and take profit. Of course, same concept we discussed. So that's where this comes from, or which was a previous level for this buy to the upside that happened here, but we're not there. And of course, this is actually the peak of it, of which when it's like this, I normally denote it with the horizontal ray in order to classify the difference between the understanding between these two levels of which one is a key area and which one is a hook area, POI, aka. So yeah, I can put that there in a sense that might also be an override level, right? So now what we can clearly see, price action is being deliberate now. And I'm not gonna go Mark's way where we're only gonna rely on hooks in terms of understanding and so on and forth. But structurally, we can see we have that 1, 2, third touch projecting out, spiking out over there. But we know, because this is more of a reversal pattern than a continuation, it's not of our interest. We really wanted to confirm, because if we were to get involved here, there's a lot of noise and a lot of, can I say volume? Probably, in a sense that it'll be wiping you out in and out, probably wiping you out to the point where you might not want to get involved anymore, and you actually miss the actual move when it's ready. So from the 4 hours perspective at this point in time of what we're looking at, we can clearly see the candlestick formation over there. It's a moment of indecision, actually.
Doji, aka. So let me just denote it. So we keep track of everything because, as I told you, this is journaling in a sense. It's not like a Zoom or what. So yeah, that's a Doji over there. Moment of indecision. I can just say that to add more weight to it. Moment of indecision. People are getting screwed. Let me use the F word because I use it a lot. So now from here, we can actually understand that the only time we would get set and go is when we have something like this, and well, that's what we're gonna play. Never mind what's gonna happen here. It's not really our interest. We're actually interested in the insurance entry, of which, yes, what I normally do is I let it trade into. There are things I call trade into hooks, where we trade into a level, or which is a level where I'm expecting price to start doing something, to either start correcting and giving me that insurance entry from there, or is trying to leave a footprint and leaves a footprint, goes down and breaks that level again. It comes back, it triggers that footprint and go down, or which you can clearly see that's a two-touch pattern. So with that, this will probably where my forecasting would be actually, and would be probably anticipating that possible head and shoulders. Okay, there's my 10 minutes. So I'm guessing this will cover this concept. Then the next session, because we'll also take a 10 minutes break, by the way, we'll cover the other kind of different mentality, because I think we took most of the time discussing scammers and that couldn't be used to actually cover everything for me, and I let somebody else come in. But anyways, let me go on. Maybe I might finish, who knows. So with that being said, it might be a possible H&S developing, of which I use the curves instead of the actual tool that comes with TradingView, because this is much more neater for me. So anyways, carrying on, letting price action play out, what we actually see now at this point in time, this would have been moved here and you would have been more focused on this. You would have been like forgot about the possible positions that would have came from here, because we can see the aggressive approach, the rule of three. So insurance entries would have been tops, but then at the same time, the bonus that came in was the candlestick formation. So this is an imperfect, I can say, evening star. These two candles, the other ones, never mind the doji, are not really equal or 50% filled in size. So maybe that might be something that I might need to look into, but I didn't really know that, by the way. I just mentioned now, so I'll look into it after this. But anyway, that's an imperfect evening. Yeah, it is an evening, it's not a morning. Evening star would have been nice to use a welcome mixture on the star representation, but then because this is broadened and I'd have to explain what I mean with my language. But anyways, there's that now, and what you're actually looking at this point now, still very the same thing. Pretty much, I wouldn't say risk entry on that. This will still be the play anyways. And still, yes, we slightly exceeded the 50%, but we haven't entirely violated a structure. So with that, letting price action play out, we can see now the market actually did something here. It didn't really trigger, right? It didn't trigger the level. Okay, it didn't trigger the level, but okay, I can get rid of this now because it's way too far out of reach. It's no longer relevant in terms of what we're doing. What's relevant now is actually this now. So this is where the concept comes in terms of where I was actually trying to anticipate it here. So you actually see it playing out here. So with that, there's a gap going on over here. Exactly at the golden ratio. There's a chart in. Something came up. I have to leave. I'll catch y'all on the next one. Have a good night, Billy. It's all right, brother. No problem. See you on the next one. So with that gap over there, yes, we can anticipate that possible failure to keep on going down. We come back up, we fill that, and we actually complete the double mini top, and we go down. But then, okay, right, the other situation is that we can break down, give a footprint over there, and sell, or something like that, right? So those are all the scenarios of which letting it play out over there. There's the flag over here coming in. So I can actually get rid of this and bring our my main focus down to that. Now we can actually go to the hourly and see the actual behavior in terms of execution that you would have done here properly. So after seeing price action, that's where you would have got your square actually here at this point. Yeah, probably they just say here that's where everything would have started for you, because you would have been seeing it. I don't know what time it was. They If it was overnight, it's fine, it's not relevant in terms of time. The understanding is, and this is the actual footprint here, I believe, exactly the 50% line. Although this might be noise, by the way, because it's not evident on the 4 hour, and this is the executional time frame where we don't look for entries there. So I might just put that off. And obviously, since we are going to the downside, we might as well pretty much do this. Because well, yeah, there's more chances to go down than we can go up. So letting that play out. If you're an impatient person, that spike probably would have caught you there. You saw it, and this was the actual confirmation. Now that the trade is ready, this is the 2 touch, which is the first flag in the run. So valid for risk entries. So with that being that, and you can see this wick fill over here, candlestick fill, I mean, is over 50% of this previous candle. So that's much more safer in terms of understanding risk and stops 20 pips above. Yes, you can go 15, even lower than that, probably stop crop, but then to be conservative and avoid being knocked out early, then it goes down. 20 pips would have kept you safer. 15 years is there, but 20 pips is much more safer for me, preferably. So yes, if that violates your risk percentage, you can just reduce the lot. Simple. So letting that play out, of which after here probably breaking, they'll be looking for something to happen, probably locking in or something. So let me just denote it as that, and let price action do its thing now. Of which you can see the progression was kind of simple and nice. After this break also over here, this BOS obviously stops there. Probably try and lock in a bit closer after this over there. And let me see, there's another BOS over there, but a possible 2 touch. But understanding sequence and where we are within structure, we know this is not really the favorite place to be taking tight flex, and we are relatively near the 90 of the inner structure, and the overall is there anyways. We understand it, it's fine. So now, okay, what am I doing with 50? Even allow me to go there. Nice. That means this is not that old. So with that, okay, at this point probably you would have had your stops just slightly above there, being more aggressive with the management. And you can see probably after this POS you would have had, probably because this went for about 13% with full margin, 130 pips. So I don't think you would have left the rest, roughly about 50 pips to 40 pips out in the market for it to decide. So probably capping in at 10% instead of 13% and leaving 3% for the market to decide would be enough, or either going for that probably 12%, because you can also see where you are. Although this might be a noise level, it's not really there because this is the green level at the end of the day, but we can see where we're trading at. So probably yes, they just say 10%. Let's be realistic with it, because this is how where we sort out the backtesting issue, of where people actually elude the emotions and the effect of time. So letting that play out, we can see now. Let's just see what it develops into. Now there comes this trade. This is actually the main prompt for everything, right? The one that initiated the 2 trader scenario that I came up with. So with that coming in now as a secondary entry for you, you would have seen this at that point. If you wanted to bring up the rectangle again, you could have done it. That's completely fine, because this is what you're looking at the end of the day, and you want to see what happens within that area. And let me just hide this for now so the chart looks clean. I will bring it back with that understanding that still, since we are playing it to the downside and confirm, you can have that update instead of having it on the bottom, because the reason why I avoid using this, it brings in confusion, because you don't know if you have to put it here or you have to put it there, because this is not just a tool. It means something, in a sense that I'm expecting this to touch there and go to the downside. And if I bring it to the downside, I mean, I'm expecting price to come to the downside and test this and go to the upside. So when price is not clear as yet, this comes in as the savior for the day. So pushing price action there, and if you are impatient and you didn't wait for the 1 hour, actually, yes, this is where you would have saying, oh, okay, there's that 2 touch now. Yeah, there's a 2 touch. But look at the candlestick formation. Thanks to Quavo, I understand something about this in terms of how far are you from the edge, and you can see this is way too far away from the edge. So for entry wise specific, and also looking at the stop distribution also, this is not really in your favor. This is about like 50 pip protection, which is way too much for exposure. And even if you were to reduce your lot, you'd see you wouldn't be gaining that much to excite you, because you have to get excited when you're in profit. So yeah, and Okay, fine. Then this is the actual entry of which price did come back and fill that, as you can see. So you would have waited there anyway. So stops there. I mean, entries there, stops slightly above there. Now you actually have a protection level. 25 pips, it's enough. You can even stop crop. Big profit is here. First one. Then obviously overall take profit is all the way down here. So looking at that, I'm left with 59 seconds and counting. Yes, we're gonna finish this one here and I'll complete on the other one. I'll just match these videos with my video editor, then upload them on Mega and share the link and letting the market play out. You see if you had broken even here, if you're too quick with it, would have knocked you out, or if it after here showing you some few blues, turn back in over there and you panicked. Probably maybe you over leveraged or over risked, and this makes you panic in terms of looking at your account size, you leave and it flushes down, makes you panic. You probably sell here because it's a breakout of this line. You have your stop slightly here, it comes back and knocks you out, then it goes down. But this is the actual entry. So after this flush over there in a break of this, you would have probably started looking at break evens then. Then after it breaks also this over here, as you can see, is the 90s of the structure as we're looking at it. So probably at this point, we would have been locked in here. We'll take profits here. So this is what, 8%, this is 9%, 10%. So yeah, would have been locked there. And
is this a MacBook or are you using or what? Which PC are you using?
What did you say?
Are you using a MacBook?
No, it's not it's not a MacBook. This is just like a board. Yeah, a board Windows, by the way. It's a Windows.
Okay.
Yeah, I'll send it to you if you want to. Just call my Doc Finder. So now you can see it's actually Windows. If I do this, you can see that it's a Windows system.
Okay.
Yeah, I just want this here because it's much more.
Okay, we're like okay, 2 more people then we pick. All right. We're like 4 now, so we can proceed.
Yeah, we're about to start. Let me just put this on where the links here. Oh, this one doesn't. Oh, it's only available on mobile. Fuck.
Apa muncul? Jadi na mana lo pakai? Jadi good. What pakai?
Yeah, bro, we'll start at quarter 2. Quarter 2 we're starting. Yeah, we're picking up. Then I'll merge the videos. Then I'll put them on YouTube and Mega for easy access. Because if I try to share them directly through the app, it's just gonna take much more data, and it might not even go through. Because I had been trying to send sessions before, but it didn't work out. So I'll upload it on YouTube, and yeah, I'll merge it proper so we can also have the first session in. So it actually makes sense as a whole. The second scenario now, right? So yeah, the link is up. There's somebody's mic I have to say. Man, it's changing. We made that. It's too loud. So what was I doing? Oh, okay, yeah. Okay. 5 minutes ago, I gave the signal. Gave the signal to buy. Yo, Quavo, do you know that video? Do you know that meme?
Yeah. Was
I
have it saved. Minutes and counting. Matter of fact, they just start now. They just start now. We have 5 people, and so that's enough to carry on where we left off. And as I was saying, this would have been running for 10% on maximum threshold, which if you're expecting your lot, then that would be 4%. Then at that point over there, we can clearly see that we are here, and what we are developing at the current moment, you can clearly view it from this perspective that we can bring the square back in now over there, in that sense over there, that yes, we are anticipating the sell. So now it's much more safer to put that there, just like we did with the other 2 positions. So if you're not in the previous session, it's okay. All this, everything we've done here that you're just coming into, by the way, you get to see where it actually comes from and why is it there. So with that, let me see, how much are we running here? So this is 10%, and when I put it here, we locked in at 8%. So roughly you can leave it for 7% and let 3% decide if the market is willing to give you more, or it's going to do something else. Because again, with is it transition? Oh, it's not microcycle. I forgot the specific word, but I'll definitely pull it back in my mind. But using the grand box over there, we can clearly see that we are in the red zone over there, where we are likely to expect larger corrections. Yes, we are clearly just leaving the amber zone. I understand where we are expecting slightly middle corrections, not too small, not too large, but this, right? As you can see, this is where we got the tight flag. This is where we got the middle flag, size flag, and this is where we're anticipating something larger. So even if you were to be quite aggressive with locking in and probably locking 8%, that'd be fine too. But anyways, let's just let price play and see what the market would have done, or which it broke through. And at this point, you would have been looking at it from this perspective, and this the rectangle can go, and you're looking at it as a BOS of this point, and you're probably looking to lock in profits at this point for that full 10% or even 11% now, of which at this point it's currently running at 13%. So you're leaving 2% on the table, of which you can either just leave 3% again, as you did on the previous, locking in 10%. So going on with that, as you can see, it didn't actually pull back that much, and it just kept on flowing to the downside, of which you're looking at this BOS next. And as soon as we broke through that, we're actually looking at this over there as a position. So this is actually a scale in, by the way. But then in terms of positioning over there, where we are within structure, because you can see this is relatively a 90% fill of the move. So we'll go proof that with the fib level, just to confirm, but that would have been that, and you would have been expecting this. So that was another entry there, of which I hadn't seen on the previous conversation that I had with Quavo. So this will actually just be an additional entry that we hadn't seen, and we can clearly see we have a footprint here. Sorry about that. We have a footprint here, but with the hook point knowledge, we know this is relatively a bit far for us to entertain. The market is not there yet, so don't be there yet. So with that, it's just there for understanding, in a sense that if it doesn't actually do this, what we actually did, of which we understand where we are too, we could have had possibly something like this, where we actually get that development for that larger structure we have been anticipating at the end of the day, where it might be something like this and probably maybe finding support there, but it doesn't really matter. And that hook point now will be turning into something like this. And this is what we'll probably be anticipating instead, in terms of where we are and within price action. But at the end of the day, this played out A 10 pip stop would have been fine here because opening it up wider would have actually exposed your risk much more, and structurally you are protected. So yeah, you're wearing a condom. So with that, you would have banked 9% with this additional entry there on top. And this now flowing all the way down here from where you got it at the upside with proper management on point, you would have led for 22% on maximum threshold, full risk exposure, 1.0 lot. Then this one over here, I'm talking in terms of a 10K account, by the way. Then this one here, it will be 9% with stop relative over there, of course. And probably you would have been risking a 0.25, a quarter percent or 0.5%. So you would have left with either $2.2K or $1.1, or either a quarter of that is roughly around $550. So around $550, which is roughly still something, right? And then $550 is a lot of money, by the way, if you're a funded prop trader, even if you're on your personal account. Then this adding on top over there would have given you an extra 900/600/300. So overall, you would have been either at 800 or either at 3K plus. Then including this position back up there, let me bring it in and see how much would have been in. Then with that would have knocked you out there, by the way. After running for 13%, you locked in 10, just like you would have done here. So repetition, as I said, actually trying to find something that you do with your eyes closed, even in the live market situation. Just don't perfect back testing where you'd be getting this crazy returns and start and test stops for no fucking reason. So with this being that, this is plus 10% on top. That's $1,000/$500/250. So with a 1/4% risk, you're on $1,000. With 0.5% risk, you're roughly on, let me see, yeah, $2K. Then with the full maximum threshold exposure risk, you're on $4K. So yeah, you can do the math in terms of your own account size. You are not related in that sense, but this is what's bringing us here entirely at the end of the day. What happened here, or which they just marked it. Let me mark the dates too, so just in case you want to go look at it. So this might just be the proper place to start. So this is Thursday, July 14, 2022. So I'll put that there as some like a mini range so you can just see it. And I ended, let's see where you were stopped out actually. Yeah, probably the, push it, yeah, there, exactly there. So that's the end of the whole entire trading session that you would have had from this point to this point, because basically you're playing that at the end of the day. You're playing the structure. So and last additional thing, the traffic light system, of which this would have been your amber or even red zone included. But let me just do this. This makes much more logical sense, where that will be in your red zone, where you wait and you don't do anything. Your amber is your get set, okay? You're getting set, you're getting ready to fire. Then this, of course, after flowing down, will be your green zone. So don't worry, I'll change the color so you can actually hear what I'm saying. Where's that thing is? That's our red line. That's our red block. Why is it not changing colors? Oh, these are the borders. This is the background. Red. There we go. That's the amber for the amber background. Let's go amber over there. Then definitely the firing now, the gun points now when you're ready to fire. So this is that. So now we can move on to the second scenario, right? Which is I think the main prompt also of why we are here, okay? In a sense that, where's that thing where I hide? It doesn't allow me to hide in replay bar. It's fine anyways, this is being recorded, so it's just the same as me keeping them. So I can get rid of everything. So now I'm gonna bring the other trader mindset, right? the first trader mindset, the me before who I am now, that is. So this is for people who are actually maybe probably a beginner into the strategy, or you understand a few basic concepts about Falcon trading, right? Impulse corrections, patterns, 1, 2, 3 touches, reversals, ascending structures, descending structures. You get the gist of it, okay? So what you would have probably seen, okay, what you would have probably seen as that person back then. Let's just say you already understand the top-down analysis and you can see this, right? So what you would have basically seen is just this, okay? Nothing more than that, nothing more than what we discussed before in terms of what's actually happening here and what is this telling us, rather than just us being able to identify our sort of like range and our highs and bottoms of where we're actually gonna play, right? So you'd have seen this where you're expecting price to actually just come down into probably buy or sell from there, break and push up, something like that. Nothing wrong with that either, it's fine. Still proper. Then here, that's your top, that's your 90s target actually, where you might be looking to play it there. Because at some point, probably either you're gonna also force this to be this a 1, 2, 3 touch. So now I'm just exposing you to every possible thing that you might go through as a beginner, or well, either the things that I would have done back then and also before the time where we are actually being involved in this, right? So yeah, you would have also tried to force that, and obviously you have this over here, there's that. So this might have also been a problem for you in a sense that it's making you think that we are ready to buy. So when you're looking at it from this perspective, so this is actually a trap, by the way. And if you know what we know, you'd know when you have such formations, when we are this far away from the edge, and mind you, we are on the monthly, so this is actually a large entire space. So from this, if this had formed exactly here, right? If this had done this, this would be a different story, right? This would be a very, very different story, where we actually have something like this. So I always cover this in every session I have, and if you don't get it even now, then I don't know. There's something wrong with you, because we're exposing everything. Maybe you just need that hand to hold you and just actually show it to you in actual live market structure, where you're actually in the emotions within the time frame, also in a sense that you are within the moment. You're actually feeling the time effect on how long it takes for this to play out. So this and this are two different things, and when you understand, you know this is just something confusing you. So with that out of the way, we can drop down to the weekly, which the weekly has nothing much to cover. It actually traps you also where you see an engulfing over there, where we engulf the previous red. So that's another red flag that you shouldn't be doing if you're starting off. Then at the same time, yeah, so I don't know where you would have tried to catch this, but it doesn't really matter for me. I'm not there. I'm actually looking at the current price action here. So let me just let that play out, of which you see if you had taken your buys there, you would have been screwed and you wouldn't understand why is this now selling, because yes, it's double bottom, there's 1, 2, 3 touch, 1, 2, 3 touch structure. So why is it not selling, or why is it not buying? And you ask yourself that question. So now this is me actually answering it at the end of the day. So now again, so now letting price action play out where we actually are focused on the previous move that we are actually involved in. So back then, right? Back then. So let me just bring that back, because you would have had that there anyways. So this is a break and retest. This is actually that monthly level for the double bottom. You would have seen it as a break and retest. And now when you're being much more recent with price data, which is what matters the most, the recent one, in terms of time frame perspective, that is, then this is where you would have looked at it, that we broke this level over here, we are testing it, it's a break and retest, so it's supposed to go down, right? Which the worst thing that could happen, or which I can't say is the worst, but it did go down. So yeah, I wouldn't love for this to fail, by the way, in order to prove a point that I want to prove. But anyways, you're seeing that as that this is your 90s target, not seeing it as a hook level, or probably something that you can actually just, yeah, you understand. So with that, what I had actually seen back then, I wish I could go get either if it's the video, I think there was a video I made on this, either it's the video, of which it's too bad I deleted all my YouTube content at some point and I deleted everything, and I don't know why, but I'll find the answers. But I broke it down, so on and forth, and if I had that video, it would be important in terms of relating it to this, in terms of how is it different from what we had before. If you're not here, what you came into and what you saw, I mean. So what I had seen there before, initially, this is what I actually had, by the way, right? This is where I saw it from, where I had a 1, 2 over there and a possible third touch. And yeah, now the actual picture of how I saw it comes back, where it was at this point, and probably a market close if it was Sunday. Let me see. Thursday, Wednesday, okay, Friday, yes, I remember. Monday, so Sunday was somewhere here. Let me just take it there. So that's how I've seen it over the weekend. So with that understanding break over there, we hadn't gotten the retest yet, by the way. So we had an override over there. These are basic fucking concepts, by the way. 1, 2, 3 touches and overrides and break and retest, or which is either we take off from here or we take off from there, right? Of which this might be that at the end of the day, or which you would have either tried to force this. Now we are less focused on trend lines and more focused on structure, right? Because this was this move, so you could have looked at it in that point of view, that you also now I usually remove this and leave it as this because I understand what this means myself, but you would have probably kept this, and this looks messier for me now. And pushing in now, that would have been that you would have probably gotten involved here, which there's nothing wrong with it. The position was actually there. You would have either probably taken a break even or a loss. Break even or a loss. So now going down there. So now this is just me telling the story of how it is. We started the beginning, the middle section, and the climax of the story. So 1, 2, there's your third touch over there, and if you know your basic base, and that's your retrace over there. Entry wise, that's your entry. Stops above there, as you can see, Old Falcon waist. 30 pip stop was our way, 25 pip, 30 pip, but now we play 15, 10. Yeah, 10 is our threshold. So we can even go 10 pips now, but this used to be how things used to be played. Before the whole entire AFT story was actually either exposed to me or was either exposed to the public. So that being that, that's where it actually moved. So let me see where this was running, because now you actually have a possibility of having a continuation here. Yes, I wasn't using rectangles then, but I'll just bring it here for my own understanding. Or you would have either maybe just seen it as a management candle where you are just slightly above there and you want to see what price action does just around that level, because you can see we also broke this. So they're putting it there, that's 18 pips from 50 pips. So yeah, 20 pips, it's too close for a leg out. So yeah, that 18 is conservative. Then excuse me, slightly pushed down. Then this is the next BOS that we're looking at, and you're probably looking to lock here if price moves a little bit slightly lower, right? So you can see, yes, you would have had your stops there at the 50 now, and now it was running at 88 pips. So you have locked in about like 5% exposed, 2%. And yeah, it actually did go. Well, this was a trade. Yes, it did go. Which at this point it's running 10%, and we're looking at these levels as inflection points, and possibly this one is the 90s target of this correction over here. So at the same time, running 10%, you can either leave 3% on the table as a decision, or 2%, looking at where we are also within structure. So pushing that in over there, you can see, yeah, left for 7%. Or probably if you are looking at it, managing it with eyes and knowing where we are with the structure, we can see that as a 2-touch continuation. We can clearly see this. And management wise, you can see if you are exactly on top of, but let me see, from 12% to 5%. I doubt you'd let it go that far. I highly doubt. Probably just say from that 12% run, you would have left out either 10% or 9% relatively there, and this would have either been a re-entry, of which I believe wait entries here. This is the correct one, I believe, although still a relatively bit far from the edge, but I think it's enough don't just to tell you what's going on. Then going down, let me see, stops 15 pips that allowed you. 15 pips was still a thing back then in Falcon. Then after seeing the break from here, then running 6% with no level to lock, you would have locked in about 50% of that, which is 3%. So you would have been there with this level over here as your potential lookout level, where price might knock you out, or which you see did come back and knock you out. But anyways, so yeah, that's what was happening then. Okay, fine. But that's not my main focus though. Yeah, so this now being that my main interest is actually from here. So at that point, I believe, actually I did take the entry and I took a loss. I remember very well, and this would have been an override level over there that you're looking at, but you're more focused on that, so it's just noise. Then we go to the 1 hour, then we see this. So I don't know, where did I enter and I got knocked out? Yeah, I think I entered here. Stop slightly above structure, which you can see this is a valid move, by the way. 35 pips, you can see it's a bit wide. So there's also a saying that just because a trade is valid, it doesn't mean that you have to take it. So you pick up something from that. So yeah, I did run through and I'd flashed a bit. That's about 1% in, 30 pips in. That's where we're looking for that possible tight flag to the downside over there. Probably a 15 minutes play, as you can see developing, where you might be looking to lock above over there, or take a scale in, or which, as you can see, yes, there was a scale in, but eventually it came to take you out. So this wasn't actually a losing trade, but either a 1% gain plus, if you took this on the break up in realistic, plus maybe a loss or a break even, depending, because this is 11 pip stop. So this at this point you're at 2%, probably locking in there. So break even 1% or something, or just break even entirely as a whole. Then now let's go to the next other ones, which at this point, this was common for both trader scenarios that you would have looked at the small possible double top. I wasn't that stupid, by the way, then. So this going down, I don't think I would have paid attention to this anyway, like I did on the previous one. And this one over here, if you'd known about 2 touches then, you would have probably tried getting involved. If you didn't, the issue would have started here. So this is where the issue actually starts, and this is where the main crux of everything for the main course of the meal for today, where at this point, without being exposed to the square trick that I have, I would have looked at it from this perspective where we have this is more horizontal than like this. Probably would have been on the 15 minutes also, where this looks valid for something like this, where I would have waited. Okay, I would have waited. So the session is about to end, which is a good thing. I'm tired of talking. We've been in this for 14 minutes now. So it would have been something like that, where you wouldn't have taken the entry, right? But with that mentality of back then, there was actually 2 things you could have done here. Either taking the risk entry here, or taking it on the breakout exactly, which would have taken it on the breakout, and that's fine. And with that means your stops would be slightly above structure, protected there for 20 pips. Again, same move on the previous one, nothing different with everything. So this one, no candlestick confirmation, and it actually flushes through and goes through, and it's a fine move. There's nothing wrong with it from the previous behaviors, the psych behavior there. So now going on over there, as you can see, same position where you would have been knocked out after running that 12%, 10% locked in over there, just like the previous one. So now we focused on the current one. So this is the one that brings in the whole entire issue. And this is where you're gonna get to spot the difference from how we work now to how we used to work then, and maybe how someone might be working now, and this might be helping them in order to move ahead and understand price action much more better, right? So with this, pushing that to the front over there, now this is what you would have been seeing. I believe I saw this way, by the way, because this is me just scrutinizing myself. I'm mocking myself in a sense, like, yeah, well, it was necessary for the development, but yeah, I'm like, yeah, I just wish I knew what I know now, and I would have been far, but that's fine. It's part of life. So just like how you would have expected to play that one on the top, exactly again, repetition, because that's your training plan. You would have wanted to play this like this with an entry there, test stops also, right? But look what happened after. This is where everything starts getting interesting. This over here. Of which, honestly speaking, right, if we were to take this on the breakout again, okay, if we were to take this on the breakout, look at where it would have forced you to have your stops. If you had them at 20 and you took it on the breakout here, it knocks you out. 25 still knocks you out. 30, you see, but you wouldn't know. You wouldn't have known. You wouldn't have known. There's just too much confusion, of which, according to theory, textbook, your stops are supposed to be here, of which now you see that puts you at 50 pips. Of which at the same time it puts you at the risk of being tucked in, tucked out, third touch, and we actually go, because it might be giving structure some weight to actually just open up and give it some much more weight in order to move to the downside, because we understand where we are, okay, where we are within the structure. The grand fib is still applicable, then it's in the foundation series, so you would have brought that here and you see this is the ember, so this would have been very possible to happen. So with that, you wouldn't have taken this, or either if you did this, then you would have got in with a very small lot size that you wouldn't be enjoying the benefits of this run, where it's 8%, where you can be floating $800, $400, or $200 slash, but you're floating for somewhere $20, $50, less than 100, let's say. And that actually gets to fill, and it never gives you an entry anywhere below where you would have possibly expected a push and a flag probably after it broke. Okay, let's just say yes, it broke and it left without you. Would have expected something like this, and does this, and actually never gives you that at the end of the day. So you can see with the other trader, he got to bank everything, literally everything, whole crazy percentage, and even saw another extra entry here, I don't know, here or there or somewhere, and it was massive. But for you, with this one, yes, you got that 10% there, but you didn't get this, right? Luckily, yes, it wasn't a loss. You didn't get taken down, or maybe it was really you did take a loss. You had a touch stop, 30 pips as your maximum, and saying yes, 3%, and I'm done. I'm not doing more than that. And it actually licks you out and it goes down. So that means you minus 3% from your 10%, and now your total gain here is actually 7%. So yeah, that's the verdict in the story that I had with this session. And we can probably see, and wow, we'll see what we learned from this. Of which now I'm just checking the participants list, and I can see the main characters of the Ifili are not here. So it's cool. It was lovely hosting you guys for the day, and I can see we have 5 minutes left. So yeah, shout out. See you on the next one. Yeah.